Hey everyone, welcome back to Corporate Decoder. Today, G.R.M.L just filed an amended 10Q, and I'm seeing a massive shift in their business strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. They've officially pivoted to mining, and the financials are showing some serious growing pains from this move. Alright, so this is an amendment to a previous filing, which means they are correcting or updating some information. Greenland Mines Ltd, formerly Clotho Neurosciences Inc., is giving us an update for the period ending the 31st of March, 2026. The big headline here is this amendment is largely due to feedback from the SEC specifically about how they present their business and financial results. Now, the company's name change is a big clue. They used to be a biotech company, but they've acquired Greenland Mines Corp, and now they are all about mining, specifically exploring the Skaergaard project in Greenland. This is a massive undertaking, and the financial statements are starting to reflect this huge pivot. Let's jump straight into the balance sheet. Total assets have exploded from about $9.6 million at the end of 2025 to nearly $60 million by March 2026. That is a huge jump, and most of that increase is in intangibles, which now stands at almost $49 million. This likely represents the value of the mining rights and licenses they acquired. On the flip side, their liabilities also shot up, mainly due to something called derivative liability, which is now over $7.7 million, a massive jump from just $53,000. This signals some complex financial instruments related to their new business. Looking at their operations, the story is stark. For the first 3 months of 2026, their total operating expenses were over $9.5 million, a huge leap from just about $1.6 million in the same period of 2025. Professional fees alone jumped from around $736,000 to nearly $3 million. This is often a sign of increased legal, accounting, and consulting work, which makes sense with a major acquisition and a name change. But the real kicker is general and administrative expenses. They went from about $850,000 to a staggering $6.2 million. That is a nearly sevenfold increase. A big chunk of this increase is attributed to share-based compensation, meaning they're giving out a lot more stock and options to employees and consultants, likely to fuel this new mining venture. And the bottom line, their net loss for the quarter was almost $14 million compared to about $2 million in the prior year. This massive increase in losses is directly tied to the expenses of this strategic shift. The cash flow statement really paints a picture of a company in transition. They used nearly $5 million in operating activities in the first quarter of 2026 compared to about $1.5 million in the same period last year. This increase in cash burn is due to those higher operating expenses we just talked about. Interestingly, they also spent over $365,000 on investing activities, specifically on acquiring mineral rights and licenses. This is where the new business is being built. On the financing side, they brought in over $8 million, mainly from selling securities. This is the cash they are using to fund this aggressive expansion. So let's break down this business description. It clearly states the company, formerly Clotho Neurosciences Inc., now has two main divisions: mining, focused on the Skaergaard project in Greenland, and biotech, continuing with their Calatu -202 for Alice, the acquisition of Greenland Mines Corp. Gives them an 80% stake in this big mining project. It also mentions a previous SPAC deal where a new medical became part of the picture, and then the name changed to Clotho, and now it is Greenland Mines. It's quite a journey. Now, here is a critical point. The report explicitly states there is substantial doubt about the company's ability to continue as a going concern for the next 12 months. They have significant operating losses and negative cash flows, and they absolutely need more funding from selling stocks or debt to keep operating. This is a serious warning sign, similar to what we saw with companies like Bed Bath & Beyond or Rite Aid before their struggles. It means if they don't get more money, they might not be able to pay their bills. They had to recognize an impairment expense of over $2 million for certain generic drug licenses. This means these assets are now considered worthless to the company, likely because they are no longer focusing on those biotech areas. This write-off is a direct consequence of their strategic shift to mining. This section details the acquisition of Greenland Mines Corp. It was structured as an asset acquisition, not a business acquisition, because the main value was in the mineral rights and exploration licenses. The total consideration transferred was about $48.4 million, a mix of cash and preferred stock. This is where most of those intangible assets on the balance sheet come from. The carrying value of these mineral rights and exploration licenses is listed at over $48 million. This is the core of their new mining business. This section confirms the new two-segment structure, biotech and mining. For the first quarter of 2026, the mining segment incurred about $332,000 in expenses, while biotech expenses were over $11 million. This highlights how much money is being poured into the biotech side, even as they're trying to pivot to mining. The mining segment has about $48.4 million in intangible assets. Looking ahead, a few things happened after the 31st of March. They appointed a new director, Jason D. Sawyer. More importantly, on May 20th, they entered into an agreement to acquire Neo North Star Resources, Inc., which owns a rare earth element project in Greenland. This acquisition will cost $35 million, half in cash and half in company stock. This shows they are doubling down on their mining strategy, adding another significant project to their portfolio. Back to the results of operations. The company had no revenue in either period, which is expected for a company in this stage. Their total operating expenses surged from $1.6 million to $9.5 million. The increase in general and administrative expenses is massive, driven by public company costs and a huge jump in share-based compensation. The net loss widened significantly to almost $14 million from about $2 million, mainly due to these higher expenses, impairment charges, and changes in the value of their warrant liabilities. And we come back to liquidity and capital resources. They ended the quarter with $10 million in cash, but with an accumulated deficit of $35 million and ongoing losses, the going concern warning remains. They are heavily reliant on future funding. Now, this is important. Management admits their disclosure controls and procedures were ineffective as of the 31st of December 2025. They cite inadequate accounting resources and a lack of segregation of duties, common issues in smaller companies. They are implementing improvements, but it is a significant weakness to acknowledge. Finally, they filed certifications from their principal officers, essentially attesting to the accuracy of the financial reporting, despite the admitted weaknesses in internal controls. So, what is the story here? Greenland Mines Ltd is in the midst of a dramatic transformation, shedding its biotech past to become a mining company. The financials show the immense cost of this pivot, with soaring expenses and a widening net loss. The acquisition of the Skaergaard project and the planned acquisition of another rare earth project signal aggressive ambition in the mining sector. However, the company is burning through cash fast, and the going concern warning is a serious red flag that cannot be ignored. They are highly dependent on raising more capital to fund their exploration and development plans. The risk I am watching is whether they can successfully execute this mining strategy and secure the necessary funding before their cash runs out. What I am actually looking for is sustained progress in their mining exploration efforts and a clear path to profitability, not just continued dilution. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.